Does technical analysis really work? Sometimes I make these TA related videos, right, where I do these relative valuation charts, where I draw trend channels, where I draw moving averages, or where I draw several technical indicators such as the relative strength index. And I come to conclusions as in, is it currently cheap or expensive to buy? And then I get these comments below those videos as in, you're completely ignoring the fundamentals around the project. Why just look at the charts? They might not have any impact on the future price movements anyways, right? As in, past performance does not predict future performance, or the past price action is already priced in. So I understand these kinds of arguments. That being said, I think there is some value in TA, because technical analysis tries to distill the psychological movements within a market. So when you look at the fundamentals, right, they don't necessarily change drastically in a very quick period of time very often. For example, during the crypto winter of 2018, we saw Cardano going down by like 98% or so. But it's unlikely that the fundamentals of Cardano went down by that much, right? Was Cardano as a project really just worth a 50th in terms of inherent value at the bottom of that market compared to the hype? So there is something besides fundamentals that impacts the price. And that influence, that's what TA is trying to measure and trying to predict. It tries to measure momentum shifts. It tries to measure herd behavior and tries to adopt and try to generate signals based on that. Now, different markets behave differently. And so when we look at technical analysis, some approaches, in my opinion, work well for one market, whereas they might not work as well for another. And that's why there is a tool called backtesting. So when you've got different approaches that just calculate buying and selling signals, such as the RSI, the relative strength index, or such as moving averages, you can just simulate trading according to those approaches. You can find out how well would that approach, how well would have worked in the past. Right? If you do this with, for example, cryptocurrency, or with stocks, or with forex trading, you can find out, if I had used that approach in the past, would I outperform? And how would my risk versus reward then be? Like how much is the volatility of my portfolio if I just followed that approach? You can also use backtesting to optimize certain parameters. So you can find out what's actually the best duration of a moving average. And when we do this, we kind of get a feeling of how well an approach works. How well does it work over time? How well does it work in different asset classes? And what I've done quite a lot on this channel actually is I've backtested moving averages, both simple and exponential moving averages, and tried to do a trend following strategy, as in, when the price goes above a moving average, you tend to buy. When the price goes below a moving average, you sell, or you bet even on falling prices. And you can then simulate how well does this work for stocks, how well does it work for crypto, how well does it work for forex trading. And you find out the more developed a market is, the more professionals in that market are, the more efficient it is. So when you go into this kind of backtesting of technical indicators, you're almost in a quant trading territory, right? It's a very simple approach, but it's kind of like a quant-based approach. You find out that's the best kind of moving average for that asset. And then the question is it really just random TA? Just like reading the stars and trying to find something out? Or are we actually now suddenly trading based on statistics, based on data? So the line there is also kind of blurry. And when you do these kind of backtests, what you find out is that in crypto, using moving averages to follow trends works very well. It works less well for stocks, and it works even worse for forex. So with forex, there seem to already be a lot of quant trading happening in the market, a lot of professionals using these trends, and with stocks you also have this to a certain degree. So the more people use a certain strategy, the more the edge goes away from that strategy, right? And so I find this fascinating when we've got a market that's not yet as highly developed, where there are still a lot of retail, where there isn't a lot of quant trading in there, it's not at least dominated by those players, then you can have an edge, right? You can ride the waves, and you find very, very interesting results with this. So for example, for the moving averages in crypto, right? With most cryptocurrencies, it doesn't even matter that much what kind of a moving average duration you take. Most of the time, if you just follow the moving averages, like you buy when the price is above and you sell when it's below, we do that approach with most moving average durations, no matter if you take the 5-day moving average or the 50-day, they tend to outperform buying and holding. So you want to be out when prices tend to fall and vice versa. You want to be in when prices tend to rise. You can then, of course, still optimize this, right? You can at least use the moving average that tended to work best in the past, and you can hope that the same kind of moving average duration continues to work in the future, and there is some kind of a consistency there. It's not perfect, but there is some kind of consistency. And so that's, I think, a pretty smart approach. This is not anymore just very randomly drawing lines and hoping for the best and kind of reading between the stars, trying to find some pattern, but that's actually really quantifiably measured. And so then it's really the question, right? Does TA work or not? To a certain degree, it might if it's done smart, right? If it's back tested. So that's why I am a bit skeptical when people just, take the random, like the 200-day moving average on a stock and say, here's a resistance, here's a support. People look at this, and so it might work, it might not. I think it's better to actually use approaches that historically for that asset class worked in the past, and where you've got an indication of how well it worked in the past. And that's what I do a lot on this channel, right? So if you look at various altcoin analyses, you sometimes see these best back-tested moving averages. When you go to the premium membership, you see an overview of all the different durations for the different altcoins and a script where you can then just toggle between the different altcoins, and you will see the best for that specific altcoin, the best moving average. And so we just use this in order to time the market and to be risk off when we are in a situation just like now where prices tend to fall. So that's the overall idea. We want to be following the general trend, and we don't want to be exposed to these very, very large fluctuations where even Bitcoin can go down 70% in this drop, right? And the altcoins potentially even more. So as a summary, right? I think when considering any approach in investing, it's always important to have a very refined, very deep dive look into things. Fundamental analysis also is only outperforming and only generating alpha if the fundamental analysis has been done to a degree that you get a market edge, right? If you have interviewed the team, or if you follow all the messages in the Discord, or if you simply know more than the average investor in an altcoin, then fundamental analysis can potentially beat the market because you simply know more, and you monetize that knowledge edge by basically realizing something earlier than the rest. This is where fundamental analysis works. Otherwise, if you just watch 1 or 2 YouTube videos on an altcoin, you're unlikely to outperform with that as well. Same is true for the quantitative approaches, for the TA approaches. You just don't want to use a random approach that anybody can do, but you want to use something that only few people do, where you have an edge in the market, and ideally you want to be in a market where there are not yet a lot of sophisticated investors, where there's still quite a bit of low competition, weak competition that you can then outperform against. So that's it to sum this all up. Hope you enjoyed this video. There will be a very similar video, just like these talking head off the hip videos, directly following after this. So hope you're gonna watch this video over here, and thanks for watching this one. Bye bye.